Good morning, good afternoon, good evening, everyone. Thank you for joining us for today's webinar. As you likely know, on the 26th of June, the International Sustainability Standards Board published IFRS S1 and IFRS S2, the first two ISSB standards. Welcome to the first of this two-part webinar series, introducing and explaining these inaugural IFRS Sustainability Disclosure Standards. These standards advance the ISSB's goal of delivering high-quality global baseline of sustainability-related disclosures to inform investment decisions and contribute to efficient and resilient capital markets. I'm Rebecca Barr, the Director of Membership. I'll be your MC for today's webinar. I manage the IFRS Sustainability Alliance, a global membership program with over 370 organizations, including corporations, investment firms, consultants, accounting firms, and others, who all share the belief in the power of building a global baseline of sustainability disclosure to meet capital market needs. A couple of quick housekeeping items before we jump into the content of today's webinar. Please feel free to submit questions while my colleagues are presenting using the Q&A feature on the bottom of your Zoom browser. We have quite a lot of interest in today's webinar, so we likely won't get to every question, but we'll do our best to answer some of these questions at the end of the call today. And this webinar is being recorded. We will share the slides and the recording with everyone after the event. So it's my pleasure to introduce my two colleagues who will be speaking on today's webinar. First, I'd like to introduce Sue Lloyd. Sue Lloyd is the Vice Chair of the International Sustainability Standards Board. Previously, she served as the Vice Chair of the International Accounting Standards Board and played a leading role in the establishment of the ISSB beginning in 2020. I'm also happy to introduce my colleague, Bryan Esterly. Bryan is the ISSB Acting Executive Technical Director. Prior to this role, Bryan was the Chief Technical Officer for the SASB standards at the Value Reporting Foundation. And with that, I will turn it over to you, Sue.
Thank you very much, Rebecca, for that great introduction. And hello to everybody listening to us today. Great to see that we have a truly global audience to match our truly global baseline in our attendees today. So as Rebecca mentioned, over the course of this session, Bryan and I are going to give you an overview of the key features in our new general requirements standard, IFRS S1, or S1 for short. But before we get into the detail, which I'll let Bryan start with, I'm going to give you a little bit of a background about the process and the whole point of these standards. So if I move on to the next slide. Before we get into the detail, it's worth taking a step back and thinking, what's the point? What are we trying to achieve with these new standards that we've just published? And it's really at its heart to facilitate a good conversation or a dialogue between a company and its existing and potential investors. So if we look at the investor side of the equation here, we've got a set of standards that are designed to result in the provision of information that enable investors to really understand how various sustainability-related risks and opportunities are going to affect the future value and prospects for a company. And for that information to be capable of being assured and for it to be globally comparable. So we end up with investors with information that they need, that's focused, and which they can rely on to inform their investment decisions. And they know that if it's a company in Canada or a company in Hong Kong or a company in the UK, that the comparisons that they make are valid comparisons based on the application of our global baseline. So that's the investor side of the equation. Now, if I have a look at the company side of the equation, it's worthwhile for the companies as well, because this is a means of enabling companies to explain to investors how to think about them when they're attracting capital. This is an opportunity to explain what the prospects of a company are and to explain why they're a good investment possibility for an investor. So it's a means of attracting capital. And so it's all about communication from companies to investors about sustainability-related risks and opportunities. So moving on to the next slide. Whenever you hear us talking about our work, you'll hear us talking about our truly global baseline of disclosures. And what do we mean when we talk about that? When you use our standards, you'll see the provision of information that's intended to be used in a common way around the world, so that there's a common set of disclosures that have been identified as being important for investors all around the world. So that's our common global baseline. We start with that as a way to ensure that there's comparability between entities around the world to inform investment decisions. And we work with jurisdictions and others to achieve this. So one really important party in our conversations is the International Securities Regulators, or IOSCO. They're looking at endorsing the truly global baseline that we've created to give the signal that these standards are fit for use in global capital markets. And we work with jurisdictions around the world. We have a jurisdictional working group that includes the UK, the US, Europe, China, Japan, and we sit in that group and we make sure that the global baseline that we're building is truly fit for purpose all around the world. So we want this common basis that can be used, and that then means that companies that use our standards in different jurisdictions have a common base, common words, common disclosures that can be used all around the world, which creates an efficient reporting system. But one of the particular complexities of sustainability reporting is that it's not only investors who are interested in sustainability information. In addition to this, other stakeholders are interested in sustainability information, and also jurisdictions are very interested in the particular disclosures that may need to be provided by companies. So we start with our global baseline, but then we anticipate the addition of building blocks. So incremental targeted disclosures can be added in addition to our global baseline if it's necessary to meet a different stakeholder need, perhaps the need of employees or public policy purposes, or if there's a particular jurisdictional need for information that hasn't been provided as part of the global baseline. But by having that global base underneath, with incremental disclosures, it means we have global comparability for the base and a system that can be used by a company across markets in a really efficient way. The last thing I'll say on the building blocks approach is another important partner for us is GRI, the Global Reporting Initiative. Working with them, we hope that the combination of our global baseline, which is laser focused on meeting investor needs, alongside the GRI standards, which are focused on broader stakeholder needs, as a package can be an efficient reporting system to allow companies to report across their stakeholders. So moving on to the next slide and the development of S1 and S2. For those of you who have been watching our journey, you might remember that in March last year, we put out proposals that were the precursors to the standards that we finalized just last week. And we were really delighted when we put our exposure drafts out to find a massive amount of interest in our work around the world. Over our 120-day consultation period, we received more than 1,400 responses in writing from our stakeholders, in addition to holding an enormous number of meetings with stakeholders around the world. That meant that we really benefited from understanding the global perspective on our standards when we were finalizing S1 and S2 for publication last week. So over the course of from September last year until our publication, we had meetings and the public meetings where we discussed the feedback and made the decisions leading to S1. And so if you're interested to understand how we processed all your letters and feedback and how you can get from understanding what's in the final S1 relative to the proposals, we have a feedback statement on our website that you can look at, which gives you a lot of details about how, in particular, we address the need to ensure that even small companies and companies in emerging markets can apply our standards well. And with that general background, I'm now going to hand over to Bryan to start walking you through the details in S1.
Thank you very much, Sue. And Sue, I'm thrilled to be here today presenting alongside you, especially listening to you through some of the background and the evolution of how we got to this really exciting milestone a couple weeks ago of having now issued S1 and S2. I'm going to start by sharing some of the key aspects of S1, and I'll then move on to some more of the specifics on the contents of S1 in subsequent slides. This slide here provides an overview of some of the key aspects of S1, our foundational standard. First, S1 sets out the overarching requirement for a company to disclose information about its sustainability-related risks and opportunities that is useful to investors in making investment decisions. S1 also requires that disclosures are part of a company's general purpose financial reporting package to make sure it is connected to and can be considered alongside financial statements. S1 also sets out general requirements for the content and presentation of sustainability-related financial disclosures. This includes the core content that is required to be disclosed for a complete set of disclosures. Companies providing this complete set of disclosures is what helps form the global baseline that Sue was referring to, the global baseline of sustainability-related financial information to meet the needs of global capital markets. Other key aspects of S1 include how the standard applies the TCFD architecture, meaning a focus on governance, strategy, risk management, and metrics and targets, a structure that's already used by many, many companies around the world that have implemented the TCFD recommendations. S1 also requires industry-specific disclosures so that companies can focus on reporting that is directly connected to their business model and their business activities. This improves the usefulness of information for investors, including the comparability of disclosures across peers. S1 establishes sources of guidance to help companies identify sustainability-related risks and opportunities and information, including metrics to disclose. For example, the ISSB standards are included as a source of guidance within S1. Finally, it's important to note that S1 can be used in conjunction with any accounting requirements. In other words, it's GAAP agnostic. Though it should be noted that S1 did benefit from leveraging many concepts from the IFRS accounting standards. Next slide, please. In terms of how S1 is set out, it's made up of 6 sections. First, the overall objective of the standard. Second, the scope of the standard and the ISSB standards at large. Third, the conceptual foundations of sustainability-related financial information, which includes the requirements on materiality and connected information, for example. Fourth, the core content disclosure requirements, again, those related to governance, strategy, risk management, and metrics and targets. Fifth, general requirements that broadly apply to ISSB standards, including location of disclosures, timing of reporting, and statement of compliance, for example. Sixth, the requirements relating to judgments, uncertainties, and errors. In the subsequent slides, Sue and I will discuss some of the important aspects throughout these sections, but let's first turn to the objective section of the standard in a bit more detail on the next slide. At the highest level, the objective of S1 is to require a company to disclose information about its sustainability-related risks and opportunities to meet the information needs of investors. When we talk about sustainability-related risks and opportunities, we are not talking about each and every possible risk and opportunity that an entity could face. Rather, S1 specifically asks for information on those risks and opportunities that is useful to investors. S1 describes this notion as the sustainability-related risks and opportunities that could reasonably be expected to affect the company's cash flows, its access to finance, or cost of capital over the short, medium, or long term. S1 also refers to this as the sustainability-related risks and opportunities that could reasonably be expected to affect the company's prospects. This is a really important anchoring concept of S1 that helps the company narrow down to that specific subset of sustainability-related risks and opportunities to provide disclosures about. Next slide, please. It's important that we be clear about why sustainability-related information matters to investors. S1 explains that information about sustainability-related risks and opportunities is useful to investors because a company's ability to generate cash flows over the short, medium, and long term is inextricably linked to the interactions between the company and its stakeholders, society, the economy, and the natural environment throughout the company's value chain. S1 discusses how a company and the resources and relationships throughout its value chain form an interdependent system in which the company operates. The company's dependencies and impacts on those resources and relationships give rise to its sustainability-related risks and opportunities. For example, a beverage company is likely to be dependent on natural resources such as water. As a result, the company both depends on that natural resource or depends on water, and it also impacts that natural resource through its water withdrawals or water consumption. It's those dependencies and impacts that can give rise to that company's sustainability-related risks and opportunities. In this case, very likely a risk or opportunity around water. S1 builds on concepts from the integrated reporting framework, which helps companies articulate how they rely on, use, and affect different types of resources and relationships to create, preserve, or erode value for investors over time. Next slide, please. Now we'll move on from the objective of S1 to the next section on conceptual foundations. S1 sets out the conceptual foundations to support companies in reporting in accordance with ISSB standards. One important function of S1 is to set out parameters for the type of information that needs to be provided in order to be decision useful for investors. Specifically, the fair presentation requirements in S1 require a company to disclose relevant information about its sustainability risks and opportunities, and to faithfully represent or provide a complete, neutral, and accurate depiction of those risks and opportunities. I'm now going to hand it back to Sue, who's going to discuss two more of these conceptual foundations in further detail, specifically materiality and connected information. Next slide, and back over to you, Sue.
Thanks, Brian. So you handing me materiality because I brought this definition across with me from the IFRS accounting standards, perhaps.
You got it. You're the perfect person for it, Sue.
So one of the key concepts in the ISSB standards is this notion of materiality that we use. And as Brian has already said, the type of information that we're asking for, the sort of subject matter that we focus in on, is the information that a company needs to provide to its investors to enable them to understand the sustainability related risks and opportunities that could reasonably be expected to affect the entity's prospects. But when it comes to the particular disclosures that need to be provided, what filter do we use? And the filter that we use is this notion of materiality that we borrowed from our sister board, the International Accounting Standards Board. And the basic thing I want you to take away from this is that the information has to be a big deal. It needs to be such a big deal that if this piece of information was missing, or if it was a misstated, that error or absence could be reasonably expected to actually influence or change an investment decision. It needs to be such an important piece of information that its absence could have that effect. And so that's a really important filter. And it's a filter and a concept that we've borrowed from the IFRS accounting standards, which has two really important consequences. One, for anybody who's used the IFRS accounting standards, you benefit from understanding what this notion means. It's focused on investor needs, and it's focused on this filter of reasonably expected to influence decisions. So it comes with a lot of knowledge and application and practice about the idea that's being used here. The second benefit of using this term is that it means we have a really good connection with the financial statements, because this is the same filter that's used to determine the content of financial statements as well. And I'll come back to that connection point again in a moment. And it's really reinforcing the idea that the whole role of the ISSB is to ensure that we're meeting the needs of investors. And this materiality focus is totally consistent with that. I'll make two other quick observations on materiality before we move on to the next concept. for those of you who are watching it and who are interested in other perspectives on materiality. The first is to say that this notion of materiality that's used here is very similar to the notion that was used as a basis for the SEC's proposals on climate last year. There were some mandatory aspects of that and a couple of differences, but this basic idea of an investor focus is fairly aligned with the US SEC approach. But it's different to the approach that we see in Europe. In Europe, in the European Sustainability Reporting Standards, the ESRS, we love our acronyms, they have a consciously broader focus on materiality because they've designed standards not just to inform investors, but to meet broader public policy and information needs. So in Europe, they're using the concept of so-called double materiality, where they're interested both in meeting the needs of investors, but also meeting the information needs of a broader range of stakeholders, including business partners, employees, non-government organizations, and also focusing on pure impact materiality. So it's a broader focus. And so that's a key difference. But for us, it's all about this investor information need that we're focused on. So moving on to the next slide and the concept of connected information, which is another really important conceptual underpinning in S1. We want the report that is provided using the ISSB standards to be a package of information that's a really good basis for communication. And one of the things that helps with communication is making sure there's clear connections in information. So IFRS S1 asks for information that enables investors to understand some different types of connections between different sustainability related risks and opportunities, connections in the information about a particular sustainability related risk and opportunity. How are you governing that risk? What's your strategy? What are your metrics and targets in relation to, say, water risks or opportunities? And the other connection that's very, very important is the connection between the information in the sustainability disclosures that we ask for and the information that's provided in the connected financial statements as part of that general purpose financial reporting package that Bryan was talking about before. And this is a really important role of the ISSB to make sure that investors can understand the package of information that a company provides. So we make these connections by requiring that the same reporting entity provide the financial statements and the associated financial disclosures on sustainability. So if it's a consolidated set of financial statements, it's a consolidated entity that reports on sustainability risks. We ask that the information be provided at the same time as the financial statements. And we ask that wherever it's possible, based on the accounting requirements that a company is applying, that there be consistent data and assumptions used in the sustainability reporting and in the financial statements. Because all too often, investors say they don't understand how a company can be saying this about sustainability over here. And then when you pick up the financial statements, there seems to be a complete disconnect. And the other connection that's a really important part of S1 is a requirement that information be provided about the current effects in the financial statements of a company's sustainability related risks and opportunities. And that's another good example of connections. Moving on to the next slide and talking a little bit more about the structure and the content of S1, and here what we call the core content of S1. Now, for anybody who's familiar with the Task Force for Climate-Related Financial Disclosures, the TCFD recommendations, when you pick up S1, you're going to feel right at home because you're going to recognize those structures and concepts that come from the TCFD recommendations. So S1 says that whenever you're reporting on a sustainability-related risk and opportunity, no matter what the topic is, we want information to be provided about how you are governing that risk or opportunity, your strategy for dealing with it, how your risk management processes and approaches are taking into consideration those risks and opportunities, and the metrics and targets that are being used to help you to monitor and manage and assess your performance against your targets. We build on the TCFD recommendations because we were given a very clear message from the market when we were established not to start with a clean sheet of paper. There was great material out there already, and the TCFD recommendations are a great example of that. And another really important thing to say is that if you're already using the TCFD recommendations, it's great news for you because you're in a great position to get started to apply the ISSB's standards. So that is the end of the summary of the conceptual foundations and the core content of S1. And so, Bryan, now I'm going to hand over to you to talk about the general requirements section of S1.
Perfect. Thank you, Sue. Turning to the general requirements section within S1, which is listed here on this slide. I'll cover a few of these bullet points shortly, but I actually first want to focus on the last one in this list, the statement of compliance. A company that complies with all requirements in the ISSB standards can make an explicit and unreserved statement of compliance. A company is able to assert compliance only if it meets all the requirements of the ISSB standards. S1 relieves the company from disclosing information otherwise required by an ISSB standard if law or regulation prohibits the company from disclosing that information. The standard also relieves the company from disclosing information about a sustainability-related opportunity if that information is commercially sensitive. We'll now move on to the next slide and focus on sources of guidance. As Sue and I have discussed, S1 asks companies to provide material information on all sustainability-related risks and opportunities that could reasonably be expected to affect the company's prospects. IFRS S2 sets out the requirements for climate-related risks and opportunities. So what about the risks and opportunities beyond those related to climate or other sustainability related risks and opportunities aside from those that are climate related? This is where the sources of guidance play a really important role in S1. S1 directs companies to specific sources of guidance to support companies in the identification of risks and opportunities and information to disclose about those risks and opportunities. So first, when identifying which sustainability risks and opportunities a company should report on beyond climate, S1 says that consideration must be given to the SASB standards, or specifically the disclosure topics in the relevant SASB standard for the industry that the company operates in. In addition, companies may consider other materials, specifically the CDSB framework application guidance for water and biodiversity related disclosures, industry practice, and materials of other investor-focused standard setters. Then, after a company has identified the sustainability-related risks and opportunities to provide information about, S1 supports companies in identifying the specific information to disclose. Here, S1 says again that a company must consider the SASB standards, specifically the metrics associated with disclosure topics in the relevant SASB standards. In addition, a company may consider, to the extent that it meets investors' information needs, the CDSB framework application guidance, industry practice, materials of other investor-focused standard setters, as well as the GRI standards and the European Sustainability Reporting Standards. In sum, S1 provides guidance from day one for companies through these sources of guidance to facilitate reporting on all sustainability-related risks and opportunities that matter to investors. Next slide, please. Here, I'll move on to the general requirements focused on the timing and location of disclosures, as well as the requirements for comparative information. On timing of reporting, S1 requires that sustainability-related financial disclosures are published at the same time as financial statements and for the same reporting period as the financial statements. As a result, sustainability-related financial information is provided to investors on a timely basis and in a manner that helps investors understand the connections with financial statements. However, we are aware that getting ready for this reporting is something that companies likely need more time to prepare for. So there is a specified relief granted to companies in the first year of reporting, to ISSB standards. Turning to location of reporting, S1 requires disclosures to be provided as part of the same reporting package as financial statements. However, IFRS S1 does not dictate where that reporting package, the information is provided. Furthermore, S1 acknowledges that a company may issue multiple reports that form this reporting package, which helps clarify that S1 does not require disclosures in any one specified document, for example, as the focus is on the overall package of information that a company provides to investors. This is really important given that the standards are designed to be used around the world and thus facilitate jurisdiction-specific requirements on the location of reporting. I'll also note that S1 allows a company to provide additional information on sustainability-related matters beyond what is required by the ISSB standards, especially in order to meet jurisdictional law or regulation, but only if that additional information does not obscure material information required by the ISSB standards. Moving on to comparatives, companies are required to disclose comparative information for all amounts disclosed in the current reporting period, unless another ISSB standard specifies otherwise. This requirement for comparative information is broadly consistent with financial reporting. However, comparative information need not be provided in the first year a company applies the ISSB standards. Again, one of many of the reliefs granted in S1, particularly in the first year of reporting. From here, I'll pass it back over to Sue, who will help us wrap up with our last few slides before we turn over to Q&A. Back to you, Sue. And next slide, please.
Thank you very much, Bryan. So one of the really important pieces of feedback that we received pretty consistently in those 1,400 comment letters that I was mentioning earlier in our proposals last year was that people felt that given this was such a big change in reporting for many, that more guidance would be really helpful to make sure people really understood the concepts and got as much help as was needed. And so when you pick up S1, you should see that we've responded to that request. And there's two different types of guidance that's included in S1. The first type we call application guidance, and that's actually just part of the standard. You have to use the application guidance as part of what you have to do when you apply the standard, but it's set out in an appendix and it's there to provide some extra detail on some key aspects of application for our standards. So for example, there's some extra guidance in here on how to identify which sustainability related risks and opportunities to report on, how to identify what is material information using that test that I was talking about earlier on, and some guidance and short examples on the types of connected information that you might need to think about to pull the report together. In contrast, the accompanying guidance, which we call illustrative guidance and examples, is included really just as helpful background materials. You don't have to do what's set out in the illustrative guidance and examples, but it's there really to try to assist you. So an example of some of the things that we have in the illustrative examples attached to S1 is some guidance on how you might think about identifying some different sustainability related risks and opportunities beyond climate using the SASB standards. And so if you're thinking through that, that's good guidance to refer to. Now moving on to the next slide. Perhaps the biggest piece of feedback that we received in response to the proposals last year was that we needed to be really aware that for many, this was a huge change in reporting that they needed, that people needed time to get used to. We needed to, and that we needed to cater to different circumstances. And so we needed to really address what we called proportionality, making sure this was a truly global baseline, a set of standards that could be used not just by the largest, most well-resourced companies in developed economies, but by smaller companies and by companies in emerging markets. And we really tried to take that to heart in finalizing our standards, and that's reflected in a number of ways. So firstly, where we could, we used well-known terminology and concepts. So one example is materiality that we've been talking about, but quite a lot of the terminology and the concepts that we use in our standards have been borrowed from the IFRS accounting standards, which are familiar to many of our stakeholders. We did a lot to address this proportionality question. So in many places in S1, also in S2, we refer to this notion of a company being required to use information that's available to them without undue cost or effort. And this is to make sure that the ask for those who are newer to sustainability reporting, who have got less resources and expertise, have a less onerous request in terms of the information that they must gather to apply our standards. You still need to make sure that what you're using is a reasonable and supportable set of information, but we're not asking you to search exhaustively. And we want to make sure there's a difference between what we ask of the more resource companies and those with fewer resources. That's also reflected in several places in the standards where we say that the skills, capabilities, and the resources of the company writing the report are taken into consideration. And that may enable qualitative information rather than quantitative information to be provided in a number of cases. Brian's already mentioned the fact that we refer to third-party materials, the ISSB standards. We built on the TCFD materials. That's all designed to ensure that materials that companies may already be familiar with, may in fact already be using, can be used as a basis to begin your ISSB reporting. Now, the last area that we provided help with is in relation to transition reliefs. And in the first year that you use our standards, we included a number of reliefs to help you get started. And I just want to highlight a few of those. The first one, and probably the most important one to be aware of, is that in the first year that you use S1 and S2, you're only required to report on your climate-related risks and opportunities. So even though S1 ultimately, as Bryan explained so well, requires a company to report on all of their important sustainability-related risks and opportunities of interest to their investors, in the first year, you only need to report on climate, even using S1. And that's to give people time to get used to the concepts and the ideas in our standards to get started on their ISSB sustainability reporting. Also, even though we ultimately ask that the information in the sustainability report be provided at the same time as the financial statements, in the first year to help companies get ready, we allow that information to be provided later. So in the first year, when you provide your annual sustainability reporting using our standards, that annual information can be provided with the following half-year reporting package. We also provide relief in the first year from providing comparative information. And these reliefs are all designed to help people get started on their reporting journey. And talking about starting on the reporting journey, let's move to the next slide, which talks about when we ask you to start using our standards. So the great news is that if Bryan and I do a good job inspiring you today of the benefits of applying IFRS S1, you can use it straight away. It's available for use right now. We've designed S1 and S2 to be used in a proportionate way so that companies can start with a less complicated approach to use our standards and improve the way that they use the standards over time. Become more comprehensive in the information you collect over time, for example. That's built into the standard. And because we have those proportionality exemptions in the standards, because we have those initial transition reliefs that I was just talking about in the first year that you use our standards, we ask companies to start using our standards from next year. And we think that's possible because of the approach that we've taken to this initial application of our standards. We also think it's really important for companies to get started. The best way to learn is to apply our standards. And so by starting with climate information first, where we've got the greatest investor demand, and with CDP, that really important platform for sustainability information, asking companies to provide information using IFRS S2 from their 2024 reporting in 2025, our standards are designed to support an early start on the sustainability reporting journey. Having said all of that, even though this is available for use now, even though we think it's possible for companies to use these standards from 2024 reporting, if you're waiting to hear what a jurisdiction requires you to do, as opposed to what you may choose of your own free will, different decisions will be made from jurisdictional perspective in terms of the mandatory date for application of our standards around the world. And that's a conversation that will be unfolding over time. So with that, I'll move to the last slide and just point out that we've given you an overview today, which hopefully gives you a good taster of S1. If you want to find out more, including reading S1 itself, that's all available along with other materials on our website, ifrs.org. And now I'm going to hand back to Rebecca, who's going to open up the floor for some questions. Thank you.
Thank you, Sue. Great. I'm going to stop sharing. All right. Well, thank you, everyone. We have about 20 minutes left for questions, and we've had some great questions come in through the chat. Quite a lot of questions, so we'll do our best to get through as many as we can. Let's kick off here. I think this first one, maybe Sue, you might be best positioned to respond, and Bryan, feel free to add on. But we've had a lot of questions in the chat about what this means for both the initiatives that have been consolidated and built upon into the ISSB standards, such as the SASB standards and TCFD, and what this means for other remaining initiatives, such as GRI and the new European sustainability reporting standards. So Sue, could you please provide an explanation for how preparers should think about these initiatives and how they relate to the ISSB standards?
Absolutely. So good place to start. So I'll focus first on the SASB and the TCFD, and I'll put those in a similar bucket to start off with. And as we mentioned, the first thing to know is that the TCFD recommendations form the basis for both S1 and S2. And the SASB standards are a set of materials which we require companies to refer to and at least consider in preparing both their industry-specific disclosures for climate, but also to determine what to report on and the disclosures to provide on sustainability topics beyond climate until we build out our ISSB library. So that means that if you've already used the SASB standards or the TCFD recommendations, you're in a fabulous starting position to get going with the ISSB standards. It also means that even if you start now using the SASB standards or the TCFD recommendations, that's a great way to get ready for an ultimate application of the ISSB standards. So we frankly encourage companies to continue to start to use those materials as a path to adoption of the ISSB standards. So they very much coexist with the ISSB standards, and we see them as part of the journey to application of the ISSB standards. Now, that's slightly different to the situation with the GRI, the Global Reporting Initiative standards, and also the European standards, ESRS, which will permanently coexist with the ISSB standards, is our expectation. Whereas the SASB and TCFD are really part of a transition to the ISSB standards. It's more the case. So if I look at GRI and if I look at ESRS, and I'll look at GRI first, the plan there is that the global baseline for reporting to investors is the ISSB. We want that to be the case. The global baseline for reporting to broader stakeholders is really the Global Reporting Initiative, a very well-established global sustainability reporting regime with a different focus to what the ISSB had and what the SASB had before us. So we have an MOU, a Memorandum of Understanding with the GRI. Our vision here is that we will communicate to our stakeholders in a way that they can use our global baseline to report on a globally comparable basis to investors, and then work with the GRI standards to meet the needs of other stakeholders, consistent with that building block approach that I was talking about earlier on. The other example, which is a really important example, is the European requirements. And as I mentioned, a bit like GRI, they've got this broader focus than us. They've got this double materiality focus. And so we need to think about how we coexist with the European requirements. And that's something we've been putting an enormous amount of energy into, because we know it's important for many of our stakeholders, not just in Europe, but also large corporates outside Europe are going to have to apply these European requirements, we expect, in a few years' time to their consolidated operations. So what we've been doing with our friends in Europe is to make sure that where we have common disclosure requirements, we've aligned as much as possible our disclosures. So the disclosures that you might provide, for example, on greenhouse gas emissions could meet our ISSB requirements and the European requirements. And we set out very clearly the incremental disclosures you might need to provide if you also want to meet the European requirements. So the dream there from an ISSB ESRS perspective is you use the ISSB standards to communicate in a targeted, focused way to investors, and that forms part of your overall compliance reporting for European purposes. And so the two work well in partnership because of the efforts we've put in place there.
Great. Thank you, Sue. Bryan, anything to add on that question there?
Oh, I would just go back to very briefly to where Sue started out in that, especially as a former SASB technical staff member, before the ISSB was established. We heard so many times from investors around the world that they were looking for a comprehensive global solution that brought together TCFD and the SASB's more bottom-up or industry-specific approach. So it's just been thrilling to see the ISSB make the decisions, really take the position that it has around incorporating and building off the SASB standards in a very clear, strong way within S1, also within S2, and then how directly and how strongly the TCFD recommendations have been incorporated and really built upon to help form the basis for S1, our foundational standard. So it's just been exciting to see how much this really has played out, consolidating and building off of the work that the prior organizations have conducted.
Great, great, agreed. Here's another question. Maybe Brian, you want to take this one. There are a few questions in the chat about, firstly, how to identify or define a risk and opportunity. And then secondly, whether you can disclose risks and opportunities, you need to disclose them under other reporting requirements, but might not be material to investors. Can you speak to that question?
Yeah, perfect. And it's a really important question for S1, given again the requirement around the identification or disclosure of all sustainability related risks and opportunities that could reasonably be expected to affect a company's prospects. And so it really immediately raises that question of how do I identify and define that range of that subset of sustainability risks and opportunities. I think the most helpful answer I could provide in just a quick moment here is 2 quick points. One, in that we learned a lot through the exposure draft process, and I think made a lot of improvements to the final version of S1. One of the improvements was our expanded discussion around the conceptual basis for where sustainability risks and opportunities come from. In other words, the impacts and dependencies that give rise to sustainability related risks and opportunities. We have specific application guidance in S1 now that we think is useful for clarifying this conceptual basis. On its own, however, we aren't under any illusions that that's going to solve all of the challenges around consistent identification of risks and opportunities. So this is again where I'd come to point number 2 and go to what we call the sources of guidance, which are really meant to be a very practical, just very concrete, practical solution for a company to pick up, looked at specific sources of guidance. So for example, the SASB standards, look at the relevant industry standard, and right there will be a set of disclosure topics that are likely to be the risks and opportunities that are appropriate for disclosure within S1. So those are the two areas that I would at least initially point companies to: the expanded conceptual discussion on where these risks and opportunities come from, kind of the conceptual basis. And then number 2, on the other hand, the very practical, much more concrete sources of guidance that can help a company implement S1. I hope that's helpful, Rebecca.
Great, thank you. Sue, another question for you here. We're getting some questions in the chat about the location of disclosure and what it means to say within the financial reporting package. We're also getting a lot of questions about what this means for integrated reporting and the integrated reporting framework. Would you be able to share some insights into both what we mean by location and what this means for integrated reporting?
Sure. So on what we mean by location, it's at the same time as the financial statements and sort of within the same report, or co-located in a sense, if you want to think about it in a physical sense. So it could be included within a sort of management commentary type section or MD&A style of section, if I use US terminology. And we are agnostic, as Bryan said, because in some jurisdictions there will be a specific place that it's required to be located. As long as it's sort of together and at the same time, that's the key thing to enable these connections to be created. One of the really, I think, fantastic things, and we're very lucky at the IFRS Foundation to have inherited the integrated reporting framework as well as the ISSB standards, is that the integrated reporting framework can provide a great home for the information coming from S1 and S2. And it's actually something that we're working on more materials to describe to our stakeholders. Because if you think about these sources of value creation that Bryan was talking about, that we borrowed from the integrated reporting framework, those concepts were borrowed from there. And in a sense, S1 and S2 are very specific examples of the sorts of disclosures that were in the minds of something like an integrated reporting framework language. Specific disclosures that can be used to populate some of the things that the integrated reporting framework is asking for. And a lot of the concepts that are in S1, like asking for information about governance, for example, are concepts that are very familiar from the integrated reporting framework. And so one way to approach the reporting and to approach the package would be thinking of integrated reporting as being the sort of vehicle, if you like, for pulling things together, including our disclosures.
Great. So you alluded to this a bit at the end here, and another hot topic in the chat is around adoption and the mandating of the standards. Could you talk a little bit about what that might look like in terms of what jurisdictions are doing to introduce the ISSB standards?
Sure. So now that we've published the standards, we're very much looking to the use of the standards so that this great information is out there for the benefit of investors. And we're really looking at a two-pronged approach from the foundation's perspective. One is those who just choose to use our standards because they decide that's a good way to report to investors and a good way maybe to communicate to investors in combination with the European regulatory requirements. So that's a sort of voluntary route. But of course, the regulatory route is what the IFRS Foundation is very well known for, because that's where the accounting standards are usually used. And so what we're doing there is really a couple of strands of activity. One is working with IOSCO that I mentioned in passing, the international securities regulators, who have supported our work right from our establishment and continue to do so today. And they're in the process, now that we've finalized the standards, of reviewing them with the objective, hopefully, of endorsing them as being fit for use. Now, what's the consequence of that? Unfortunately, that doesn't mean that everybody then has to use these standards all around the world. Unfortunately, I say, but it's something that happened in the past, one unique occasion previously, and that was the endorsement of the IFRS accounting standards. And that was a massive catalyst to the global use of the IFRS accounting standards by jurisdictions around the world. So it's a really important catalyst to give confidence to regulators to mandate the use of the standards, which is why we are so excited that IOSCO is working with us in this way. So what does that mean? That means that will be an important moment, we hope not too far away. But in the interim, we already have signs of use of the standards around the world. So the Japanese Sustainability Standards Board has announced an intention to produce Japanese standards that build on S1 and S2. In the UK, Australia, Hong Kong, Singapore, there's consultations underway about asking questions about building on our standards as part of the regulatory regime around the world. And so really it's up to jurisdictions to be making these individual decisions that would then lead to particular entities within their jurisdictions being required to use our standards as part of the regulatory reporting requirements in those jurisdictions. So that's an ongoing journey that we expect to accelerate now that we've finalized the standards.
Great. Bryan, we're also seeing a lot of questions in the chat about audit. While auditing is not a part of the ISSB responsibilities, the standards do elicit verifiable disclosures. Could you comment on what is happening around auditing and audit for sustainability information?
Yeah, sure. Great question, Rebecca. Happy to hear that's been coming up a lot. And just can't help but emphasize what you already said, Rebecca, that it's the ISSB's role to establish sustainability disclosure standards, not audit standards or audit requirements. That would be up to other organizations as well as jurisdictions, and then in some cases how companies may choose to use an audit as part of their process, absent other jurisdictional requirements, for example. With that said, and I think what you're getting at is S1 does focus on this requirement around providing useful information for investors. And so what we do is we lay out really what we mean by useful information. Verifiability is then what we refer to as a characteristic, one of several characteristics of useful information. So this is something that the board, the ISSB, is thinking about when simply establishing standards or disclosure requirements, but it's something that by way of S1, we're requiring companies to think about when they're providing their disclosures. In an effort to provide useful disclosures, how can the information that they report be verifiable? And then we have some application guidance that discusses what we mean by verifiability, and really with the view that if the information disclosed can be verified, then that can improve the usefulness of that information. With that said, there's a lot taking place in the audit landscape, if you will, the sustainability audit landscape. And we regularly work with and coordinate or communicate with other key organizations. The ISSB would be one example. And there's just a lot of exciting movement in this space as audit providers and other organizations in the audit landscape are getting more and more prepared to play their role within the reporting ecosystem as sustainability reporting matures further and further. Sue, if there's anything else you would like to add, then feel free. Otherwise, back to you, Rebecca.
Great. So going back to the first question I asked you, Sue, related to the other kind of standards and frameworks and consolidation, there was a recent update regarding the Task Force on Climate-Related Financial Disclosures. How does that update impact reporting? Will companies who currently report under the TCFD be required to report on all ISSB standards to be compliant?
That was a very exciting announcement just in the last few days that the Financial Stability Board made an announcement really recognizing the fact that having now issued S1 and S2, which at the heart of both documents incorporates fully the TCFD recommendations plus more, really acknowledging the fact that that's the culmination of the journey of the TCFD recommendations. It was set up, I've heard Mark Carney talking about this, it was set up originally as a voluntary initiative, as a framework, always with the sort of vision and the dream that ultimately this would become part of a standard that's more formally articulated and moves into regulatory requirements. And so us having taken that, built it into S1 and S2 is seen as having completed or culminated that journey. So that's essentially what they acknowledged in the press release this week. And the other thing, which is quite exciting, is that part of the role of the TCFD in the past was that they provided an annual report, or the Financial Stability Board did on their behalf, of the sort of level of uptake and what was being seen in practice and the application of information based on the TCFD recommendations. You know, who was using them, what information was being provided, what did good practice look like. We've been asked to take on the responsibility for that monitoring work that used to be done by the Financial Stability Board, sort of recognizing that we're now, you know, the sort of legacy organization, if you like, for that prior work of the TCFD. So there's no real sort of, it doesn't mean the TCFD recommendations don't exist anymore, or that the, you know, if a company's using the TCFD recommendations, they can't anymore, they have to use the ISSB standards. It's rather recognizing just how fully integrated we have been in using the TCFD recommendation. So a super, super important moment. And I think the last thing I would say on that is that one of the things we're really trying to achieve here, one of the purposes that we exist for, is consolidation, removing the so-called alphabet soup of reporting. So no longer do you need to do both the TCFD recommendations and the ISSB standards. If you use S1 and S2, you can tick that box. You've already done TCFD. So it's part of this rationalization process that we're working really hard to achieve.
Great, great. Well, thanks so much, Sue and Bryan, for answering those questions. I know there's many more we did not get the chance to ask you both, but this is really just the beginning of, you know, answering these questions, educational content and programming that the IFRS Foundation will be offering. So I'm going to move towards wrapping us up today because we are quickly running out of time. But thank you, everyone, for joining us. Join us next Tuesday, July 18th, for the second part of this series on IFRS S2 climate-related disclosures. If you don't have the link for that webinar, we'll be sending it in the follow-up email, so you can join us next Tuesday. It'll also be recorded if you can't make it. Like I said, stay tuned for more educational events and programming like this one from the IFRS Foundation. Check out our website, social media channels for programming in the coming months, really available to the public and to everyone across the market. And if you're interested in learning more about the IFRS Sustainability Alliance, our membership program where we connect members in dialogue and bring together peers around this evolving field of sustainability disclosure, you can contact us at sustainability_alliance@ifrs.org. So thank you, Sue and Bryan, for your time. Thank you, everyone, for joining us today, and have a great rest of your day. Bye now.